What's going on, guys? My name is James Travis, and today I'm here to talk about something that we all feel like we should be doing, but many of us just don't know how to get started. Today, I'm going to be talking about the easiest way to invest your money. You're going to learn about the robo-investing platform Wealthfront and how it can help you reach your financial goals in life. Every single one of my friends who I've talked to about Wealthfront has opened an account and have thanked me for giving them the opportunity to help them earn money 5 days a week. Today, I'm going to do that for you too. Be sure to stick around to the end of the video. I'm going to have a guide that lets you know if Wealthfront is a good financial option for you. Let's get started. This video is going to be broken down into 3 sections. The first section is what is Wealthfront? Second, we're going to be talking about how to use it. And third, what is PATH? It's part of Wealthfront, but it's really important to how it works. The first thing that you're probably wondering is, what is Wealthfront and why should I even care about it? Most people who have a lot of money try their best to make it grow. They do this by investing their money into different avenues to try to make more money out of the money that they already have. And it makes you wonder, why don't we do the same thing but on a smaller scale? That's where Wealthfront comes in. The reason why a lot of us don't invest, myself included, I was one of these people once, was that investing is confusing. We think investing is picking stocks and trying to make our money grow by watching the markets all the time, when really investing is a long-term game. So back to why people don't invest. Number one, it's time consuming. How do you even know what to invest in if you have no idea about anything about investing? Lots of people think that, maybe I should pick stocks. What about bonds? Maybe I should learn about all these different things. We get so overwhelmed that we don't do anything with our money. The second reason is it's confusing. Most people have never taken a personal finance course in their life and really don't know what to do with their money once they get it besides spend it. Reason number 3, salespeople. When you really think about it, financial advisors aren't incentivized to help you make money, but instead, based on the recommendations, they make a commission. So if you make a little bit of money, that's good for you, but they won't lose sleep at night if your portfolio goes completely upside down. That's where Wealthfront steps in for people who don't have a lot of money to hire a financial advisor, but they want to get into investing. Wealthfront is like having a software-based financial advisor that makes trades based on how you would take risks. The best part is Wealthfront does all the things that a financial advisor would have done before a fraction of the cost. The reason why this is because Wealthfront is operated by computers that make smart trades for you. Without getting too in depth, Wealthfront uses modern portfolio theory to make trades on your behalf. Modern portfolio theory shows that an investor can construct a portfolio of multiple assets that will maximize return for a given level of risk and optimize your portfolio for maximum return based on how you take risks. You get to choose this risk whenever you open the account. We'll talk about more of that later. It basically means Wealthfront will invest your money based on how you take risks. At the time of this recording, Wealthfront invests your money across 11 different asset classes. Think of asset classes as different baskets that your money is allowed to grow in. Each asset class isn't correlated with any other asset class. So if one does bad, that doesn't have any effect on the other asset classes. As the old saying goes, all your eggs aren't in one basket. So let's say in one asset class, your money grows by a lot. And the other 10, it grows by just a little. Let's say the market has a very bad day or bad week, and the one that you had all your money in, well, not all your money, but most of your money in, falls sharply. The asset class that lost a lot of money doesn't affect the 10 other asset classes that have grown modestly. In that way, you are protected against risk through diversification. Next, we're going to talk about how does Wealthfront work? Like I said earlier, Wealthfront was created by world-class financial experts. When you first sign up for Wealthfront, you start by taking a risk assessment quiz. It's only 10 questions long. It consists of 4 objective questions and 6 subjective ones. These questions, in addition to determining how you take risk, will also assess how you like your assets to be allocated. Once asset allocation is set, it will remain constant no matter how much money you have in the account. If your portfolio grows unevenly, which happens all the time, your portfolio will be readjusted and rebalanced. Section 2 of this video is going to cover how to use our Wealthfront account. Once your account's funded, this is what it's going to look like on the inside. Since I've had my Wealthfront account for a couple of years, you'll be able to see what it looks like long term. The blue line represents how much money I've deposited over the years, and the green line represents my return on investment. Below that, you can see how my individual asset classes fared. You can see how much growth they've had over the life of the account. From day to day, you can check your Wealthfront account on your app. You just open the app, and then after a couple of days, you pull it out again, and that's how it works. You make money. Seriously, Wealthfront prides itself on doing all the heavy lifting for investors. So the only thing that you have to do is set it and forget it. Let's start from the beginning. Once you receive your risk tolerance score, you can now fund your account with at least $500. That's the minimum, which will allow your money to grow monthly in Wealthfront. If you go through my link mentioned at the end of the episode, you'll get up to $5,000 managed for free. If you have any plan other than Wealthfront's 529 college savings plan, Wealthfront is going to charge you 0.25% per year, which means if you have $1,000 in your account, you would be charged $2.50 annually. Like I mentioned earlier, if you go through my link, you get the first $5,000 managed for free. If you exceed that, that's when you start getting charged. In addition to that, you only get charged on the percentage that's not free. Let's say if you go through my link and you get the $5,000 off and you have $6,000 in the account, Wealthfront is going to subtract your free $5,000 from the $6,000 that you have in the account and charge you on the remaining $1,000, which means you'd only get charged annually $2.50. If you do happen to have Wealthfront's 529 college savings plan, you'll end up being charged less than half a percentage point annually. If you live in Nevada, you get up to $25,000 managed for free. Wealthfront has a few different types of personal accounts. The only account that we're going to cover in depth in this video is Wealthfront's personal investment account. Wealthfront is also a good option if you like to roll over your current 401 savings plan into Wealthfront. They have tailored transfers for that. The only thing that might not transfer are certain mutual funds and stock options. Lastly, we're going to talk about Path. Path helps you know if you're on the right track to hitting financial goals such as buying a house, saving for a car, saving for retirement, and even sending your children to college. Now we're going to take an inside look at Path. To be quite honest, Path makes me feel old. As you get older, life gets more expensive. You go from worrying about rent, student loans, and car payments to worrying about a mortgage, joint finances, kids, and even retirement. Path answers questions about your financial future, like, can I live my current lifestyle into retirement? How much will I be worth when I retire? And how much that I save today to get me there? Do you have any financial goals? Are you on track to reaching them? It's hard to have all the answers to those questions because life is so unpredictable. Nobody knows what the future may hold, but Path analyzes your past spending and it learns your behavior to chart what's possible in your financial future. My favorite part about Path, it assesses your needs before it handles your wants. So if your needs aren't met, nothing else matters anyway. Path lets you focus on how the money that you save today impacts your financial future. Think of it as the eagle eye of personal finance. Path claims to handle some of the most difficult calculations in life, such as your Social Security, inflation, and your investment returns. They use your actual behavior to forecast your future. Let's say if you decide to spend all your money partying or on vacation instead of investing it, you don't need to tell Path. It already knows. It uses your past 12 months of transactions to determine if you are on track to reach your financial goals. Path analyzes the data and adjusts its advice accordingly. Path shows you where you should be saving your money to get the best return on investment. It also monitors your spending so you can adjust it so you'll be able to retire comfortably. It also shows how your spending affects what age you retire, and most importantly, it suggests your lifestyle during your retirement. This is what Path looks like when you link your accounts to them. The only thing that you have to do to link your accounts is to log into your account as you would through whatever service provider or bank that you use. Once you log in, it'll take a certain number of seconds depending on the financial institution. From there, Path will calculate how retirement ready you are. Like I said before, Path offers suggestions on how you should be investing your money so you'll have the best return on investment for your retirement. Currently, mine says I am not on track for a comfortable retirement, which means I need to get it together. By adjusting the amount of money that you save monthly, you can see if you're able to reach your retirement goals and retire comfortably. Path also allows you to determine how major financial events such as purchasing a home can affect your retirement. If you decide to buy a home, Path lets you know how much home you can comfortably afford and be able to retire on time. To be quite honest with you, I have no idea where Path is getting these numbers from because I can't afford this much house. According to Path, buying a home would be manageable, but retirement would not be easy for me. So I need to adjust my savings goals accordingly. In conclusion, you learned today what Wealthfront is, how to use Wealthfront, and how to use Path as well. Thanks so much for watching the video. As promised early in the video, in the description below, you'll find a link to see if Wealthfront is a good financial option for you. If you learned something new, please hit the like button. If you want to see more videos about being more financially literate as an adult, subscribe to this channel. What are some of your life goals? Leave a comment below. I can't wait to hear from you.